People have been looking at home builder shares rising for the past year and saying, look, it's a sign that the economy is coming back, that housing is coming back. Not necessarily. What we're seeing is some of the biggest home builders making huge profits off of making mortgage loans rather than making houses. Lennar saw its mortgage profits rise 70% in the past quarter, and we saw from Lennar was 50%, I'm sorry, Pulte Homes 70%. The two of them have seen their stock prices skyrocket over the past year, but it's built on this mortgage idea, and it's because the Fed has been buying mortgage bonds, pushing down the bond yields in the secondary market, but it hasn't been happening in the primary market. So you're getting this big spread between what the home builders and others are paying for cash and what they're lending it to you at. So their margins are widening on mortgages, and that's why they've been doing so well.
Okay, so then what does that mean for next year then? I mean, are we still going to see a big run for some of these home builders, or is there going to be a differentiation now? Investors
are starting to get a little scared about this. I mean, we are seeing the economy start to pick up, and their home building income should start to gain. But if you look at their price earnings ratios, they're way out of line with the rest of the market. Right now, running at about 39% for home builders, the rest of the market about 14.5%. So at this point, you've got to figure that more than value is priced into it. And if the Fed should change its mix, or if we should see a change in mortgages at some point, then they could lose a lot of this profit, and they will have to make it up somewhere else. It's not clear how they do it unless home building really starts to rocket higher.